Welcome back to the Trading Coach Podcast. In today's episode, we're going to talk about leveraged income and how you can leverage your skill of trading for income. Now, before we hop in, if you haven't done so already, do me a favor, like the podcast, subscribe, rate, review, do all the fun stuff that supports the show. That way we can keep growing. A massive thank you in advance because I know you just did it and I appreciate the support. Also, share this with your social community, especially if you have a trader that has questions. Just type in the question, then Trading Coach Podcast, and there's probably an episode relating to it. If not, just shoot me a message and I will kindly create one. Now, I created today's podcast really to follow up on the podcast that I just shared with you a couple days ago, where we interviewed the trader. It was the second time through, and he was talking about how him and his wife are looking to create leveraged income. And I anticipated you guys asking me the question, what exactly is leveraged income and how it is important? And I wanted to discuss it because this was really a crucial part in my trading career. Actually, not in my trading career, but just my life, when I learned kind of the difference between kind of earned income, leveraged income, and eventually passive income. And it all started with a book, two books, right? So the first book I ever read was, freshman summer of college. My dad gave it to me. Rich Dad, Poor Dad. I never read a book ever from like front to back, but that was the first one. And it kind of opened up my mind to understanding money in a little bit of a different sense. I went on to read a whole bunch of other books. You guys know all the kind of the popular ones out there. But the one that really changed my mindset was kind of the follow-up to Rich Dad, Poor Dad by Robert Kiyosaki, called Cash Flow Quadrant. Because by this point, I was done with college and I had decided that I wanted to be an entrepreneur, right? Not because I'm a creative genius and I had some great idea, but I was just tired of working for others, right? I had worked from a very young age, all the time, pretty much up to this point. And there were a few instances that had happened in my life where I wanted to take time for myself. Unfortunately, I had to ask permission from a boss. My boss said, no, you can't do it. And I was forced to basically tell myself and tell others, no, I can't do this because my boss won't let me. And like, I'm a grown man, right? It kind of hit me like, well, I'm a grown man. I should not be no one should be telling me what I can or can't do. But obviously, that's how the professional world works. And that's what kind of inspired me and kicked me up the butt to kind of pursue entrepreneurness. Not necessarily for the money, but more so the freedom. And what I learned after that was that what I was doing wasn't really being an entrepreneur, right? And this is what I learned from Cash Flow Quadrants. If you can imagine like a square, so visualize, even write down a square in front of you, there are 4 quadrants in that square. Top left is going to be E, which stands for employee. Bottom left is going to be S, which stands for self-employed. On the right-hand side, top right is going to be B, that stands for business owner, and I, that stands for investor. Now, employee is kind of, a normal employee, right? You have a job, you make money. We'll expand on that a little bit later about what type of money that is. But that's kind of the normal 9 to 5, normal, whatever you are. You're working for someone else. Below that is self-employed. And by self-employed, it means that you are your own business. You are the job. And this is what I jumped into, thinking it was the same as entrepreneurship, thinking it was the same as creating freedom. And although it did create a sense of freedom for me, it freed me up from having a job, a traditional job. It freed me up from having a boss, having to ask permission and the stuff that I didn't like doing. What it didn't free up was time, right? Being self-employed meant a lot more responsibilities. Now I was not only the employee, but I was also the employer. So I had to do the task of what the employee did to keep the business running. I also had to do the task of what the employer did to keep the business running. And essentially, I was working more and working harder than I ever did before. Now, again, I was young and I was excited. I'm free. I have no boss. And all my friends are asking for permission. I can do whatever I want. But the truth was I couldn't. I spent all of my time working because the minute that I stopped working, the money stopped flowing in, right? And this book taught me that I had to make a jump to the other side of the square, the right-hand side of the square where the B and the I exist. And the B is business owner. This is, you are the owner of a business, essentially a business or a system, I guess you can say, which means, you own everything. You have employees that do the work for you, and, you do have to do things on your own. You have to oversee, give instruction, manage all that fun stuff, put out fires, but you don't necessarily have to make the same time investment that the employee does or the self-employed. Now, I'll give you just one quick example of what I mean by this, right? So self-employed, if I own a normal brick and mortar shop and I'm the only employee, that shop, if I'm not there, if I'm sick or I called off, the shop is not open. If the shop is not open, it cannot make money. On the other hand, if I am the business owner, I have employees underneath me. I can be sick. I could be on vacation. That store is still running because I have hired people to run that for me, right? So that's a little bit of the difference there. And then I, on the bottom right-hand side, is going to be the investor. We kind of all know what investments are. So once I was kind of hit with the harsh reality of like being super excited that I made this jump and I've changed my life to forever, to like, I didn't really do what I thought I wanted to do. I kind of, it's like a half step there, but I still need to make the jump to the other side. I started learning more about money and how it works. And this is why I want to bring, I guess we'll dig into the different concepts of money and income now. So, three main types. You're going to hear these in different names and different forms and broken down in different ways. But essentially, there is kind of earned income, leveraged income. Those are the main two. And then passive income is kind of the same, but a little bit different in some of the details. But earned income is basically the employee type of income, right? This is income that you get for working. So if I'm a plumber and I go to someone's house and I fix a problem, I get paid per whatever rate I charge, right? This is kind of like I get paid directly for my work. I work a job, I do a speech, I consult, I flip burgers, whatever it may be. I get this much per hour or this flat fee per my service, right? So in order to kind of keep bringing the money in, I have to keep providing service after service after service, investing hour after hour after hour. The second type is going to be leveraged income. And this is what our trader and his wife are speaking about in the previous podcast. Now, leveraged income is you basically doing a job. So making a time commitment, a time investment for one set period of time, but you getting paid repeatedly for doing this work. So for an example, I've got a buddy of mine that is in advertising, and I was talking to him about one of my best friends. Growing up, we always thought that he should be a voice actor. He has this amazing talent. He can mimic any voice that he sees, right? It's this weird superpower skill where if you play him a voice, he can mimic it in real life. So we had a lot of fun with that during college, and we're always like, hey, once I got onto my kind of entrepreneurial venture, I was like, hey, you should do this as well. We can put together a demo tape for you. We can go out there. You can be a voice actor. You've got the personality for it. Let's do that. And long story short, he never did it. He was, a little bit fearful, a little bit scared, which is normal. That's, again, the majority of people aren't going to break out of that comfort zone. But I was using him as an example, and one of the cool things about voice acting that I didn't know that I learned from my buddy in advertising is that even voice actors have the option to get paid in residuals. So what that means is this: like I assume that when you do a voice acting job, you do the job, you get paid for the service, and then you're done. Kind of like the earned income. But the fact is that it's also a form of leveraged income because, basically residuals is kind of many actors and musicians, you'll see it as royalties as well. They have, but going back to the acting, they have, or they can put in their contract that, hey, after the initial kind of intention of the production, they can get a certain percentage of the profit made if the product is used for something else. So, for example, this is a big one, right? There was this TV series called Charmed, right? I never actually watched the TV series called Charmed, but like it was, I'm always up early in the morning, and for some reason, like every time I turn on the TV in the morning, because I usually, especially during basketball season, I have it on TNT because I'm watching some late night basketball game, Charmed is on, right? And it's been on for like forever, since I was born. But seriously, I think the original series came out in like 1998, and then I think it ended in like early 2000s, but it keeps getting picked up on TNT and like some of these other older shows, and they just play it over and over and over and over again. So what that means is that an actor from the series Charmed, who has kind of those residuals in their contract, that means that they're still getting paid. Every time TNT picks up that episode for another year, blah, 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 they're getting money off of each episode they do or each season they do, and blah, 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 blah. And apparently in voice acting, it is the same way. So going back to the leveraged income, right? You can do this acting job, a really good acting job, for one time. And the fact that is that as long as it's picked up forever and forever, forever, you can still get a check. You can, just like musicians, you can still get a royalty check for it. Writing a book is the same way. You put a lot of effort into writing a book. You put it on Amazon, and then forever, when everyone buys the book, you get your check from that book. So the last one is passive income. And again, passive income is very similar to leveraged income, but usually more on the investment side of things, right? Passive income is receiving income from assets that you've created, or I guess you've purchased. So like, when I first got started in real estate, I had to make a decision between being like a flipper or kind of like a landlord, right? Buying rental properties. One of the reasons that I never got into buying and flipping was, one, it wasn't my strong suit. I wasn't very knowledgeable in that area at all. But two, it takes a lot of work, right? It takes a lot of research to find the right property. It takes a lot of time and effort and energy to, especially when you're starting off, to do a lot of the repairs and whatnot yourself, and then go out there and find buyers. And if you don't have a team, which I didn't when I first got started, it's a lot of effort. And it's a lot of effort that you do once. You get the big flip, it's earned income. And then guess what? Then you got to do it again, right? Because I only get paid that one time off of that property. So it was earned income. And for me, I saw that as no different than having a job. It's just a different type of job. Again, there was still some freedom in it, but not the type that I wanted. One of the reasons that I flocked towards rentals is because I saw it as something that I can do once. I can buy a property once, I can fix it up once. I thought I can rent it out once, and I understood how horrible tenants are. But once I rent it out, I don't really have to do a lot more work, right? There's the normal stuff you got to do. You got to fix stuff, and you got to clean it when you're getting rid of tenants and putting in new ones and all that fun stuff. But in general, if you have a good tenant, right? If you have one that's going to be there for a long time, you do what you have to do once, and then you're just literally collecting a check each and every month. And it was a form of passive income. Investing is the same way. You put your money in a certain stock. If that stock pays dividends specifically, or if that stock is just a good one that's going up, you're essentially making money. You're technically not making money until you take it out, unless you're doing dividends. But you get what I'm saying. You're investing in something that is producing you money, and that time investment isn't necessarily there. And that was my biggest goal, to kind of eliminate the time investment. And again, just a few more examples of, I guess, creating leveraged or passive income. Let's say we're taking your skill of trading, because the skill of trading in its own right is kind of I guess depends on how much you're trading. Trading could be earned income, because it's a little bit of both, actually. Now that I think about it, it's leveraged income to a sense, right? If you are a day trader, you're technically making money while the market could be moving without you putting effort into it, aside from the initial effort. So it's kind of that blend between leveraged income and passive income. So it's kind of an interesting dynamic, and that's why I want to blend the two. But aside from just extracting profit from the market, there's other ways you can use that skill of trading as well. Like, one, you could write a book. Like, say you have an amazing journey where you went from struggling trader who graduated college and couldn't get a job to working 3 odd jobs, and then waking up one day and deciding to quit your job and pursue pursue your dream life, and then fail at pursuing your dream life for years and years and years, only to get good. And then once you got good, have money stolen from your account, and you go right back to zero, and then having to claw your way back up through teaching and managing money till you become the person you are today, with one of the top rated trading podcasts out there. If you have a story like that or something, that could be one way. You can create an online course. Stuff like that, for example. But you can use your skill of trading. You can start podcasts. You can start a YouTube channel. You can do interviews. You can do online courses. You can do one-on-one mentorship, but that goes back into kind of the earned income basket. But the fact is, you can use the skill of trading in a lot of different ways, where you can create something that you do once or every once in a while that can just keep creating you income over and over again. And the cool thing about having this leverage or passive income is that once you do something, right, again, the key is that it opens up time. Once you create this thing and you put it to the side and it's creating money for you on a daily basis, weekly basis, monthly basis, whatever it may be, again, it doesn't have that time attachment with it. It has the initial time investment, but once it's done, it's done. There's no more time attachment with it. What that does is open up more time, and then you can use more time to create another form of leveraged income. And then you do an initial time investment there, you get it done, and then you put it to the side, and then you open up more time. So it's this constant balance of like, I'm investing a massive amount of time to do something good and do it once. And then once it's done, I take that thing, I move it to the right. That time opens up again, and then I have a choice. I can use that time to kind of chill, relax, enjoy life, or I can use that time to create my next thing. And you just keep constantly building businesses and adding more and more forms of leveraged income. And it's this amazing investment cycle. But let me know what you think, and let me know if this gave you maybe a different way of looking at money, a different way of looking at trading, investing, and maybe inspired some other aspects of your life. So of course, when I say let me know, don't just yell it out. Write it down, right? If you're watching this on Spotify or listening to this on Spotify, there's a Q&A thing below that you can write your comments in. If you're listening and watching this on YouTube, you can leave it in the comment section below. Of course, you can always shoot me a DM. Also, if you have any other ideas for topics you want me to spit out to you guys in the Trading Coach podcast, let me know. I'd love to address them. And until next time, plan to trade your plan. Take care.